Welcome to the Engine Markets training session. While others are joining in, we will start with our topics, which we will be discussing in the session. So I hope my voice is audible to everyone and my screen is visible, so I can take this forward. So let's get ahead with the next screen. So in this session, we are going to talk about mutual fund comparison in our Compare tab, and we will also talk about a report generation of this comparison, which is our new updates in our mutual fund comparison tab. And then we will hopefully try to address Q&As by all the clients. You can either write it on chat or verbally, and we will try to address that up. So I hope I'm audible to everyone and my screen is visible, so I can start with my session altogether. So accordingly, if is my screen visible to everyone, you can write it on chat. And as you can see, this is the terminal of Engine Markets version, where you can see lots of parameters in the overviews and you can compare multiple indices. So let's get ahead with the funds screening and the selection so that we can talk about the comparisons of the funds. So to compare or screen funds, all you have to do is just visit this funds tab. So in this funds tab, you just have to click on this, and then you can screen any kind of categories within the asset classes as well. So I'm just gonna go through a basic filtration of the categories. Let's say we take into account one single category where we are considering mid caps. We can cancel this out. You can select multiple categories if you want. Once you have done that, you can also filter the AMCs. To filter the AMCs, all you have to do is just click on this button. Once you have done this, you can actually select all, remove some of the AMCs from the list, so that you can hopefully see these are the list updated based on the filtration you have done. There are a couple of filters we have added which will help you to filter out based on AUM, minimum age, minimum Sharpe, which will even lessen your list based on the selections you have made. So let's say we take it forward. Let's say 1500 crores is our minimum AUM. Let's say minimum age is 7 years and Sharpe's ratio is 0.20. So if we consider this three particular parameters and if we apply it, you can see only these funds that fits your criteria. Now, this is a very good way to come up with one category or multiple category if you want. If I select multiple category and apply the filter, that will also include, that SEBI classification inside that particular screener. So if I want to add them to the compare section, which is our most important topic for today, I have to, click on this in a customized way so that they can be added into the compare section. Let's say you want to select only top 10, top 15 funds. What you can do is you can sort it by one such parameter, maybe a Sortino ratio or a Sharpe's ratio, or you can actually take a view towards the column. So let's say I'm taking towards, equity columns. I can just check equity columns. I can go into this Sharpe's ratio, and I can only select those funds which fits my criteria in the Sharpe's ratio as well. So, I can add them to the compare section. So easily all these funds, the small button will help you to add all these funds into the compare section. So once they are added, they will be, visible into the compare section as well. So let's go into the compare section. In the compare sections, we have a new update, which is called as exportable PowerPoint button. But before going ahead with the export, we will talk about the compare section in a rigorous manner to see what kind of, analysis you can do into the main list itself. So one important thing is that this main list considers all the return column, which is in green, as per the inception of each funds. So let's say you want to, check all these funds return set comparatively for one particular date. So all you have to do is click on this wheel button, which will have a start date. So you can have your own start date, let's say 2015, which will actually onload all the parameters based on this particular start date. So, this particular start date is the date which is chosen here, and then you can actually see the comparative return parameters. So let's say now if we are comparing, a CAGR, So a CAGR would be easily be compared because the start date is same and the end date is as per today. So that is how you can easily compare the return columns. And we have also written that this as a custom start date as well. So whenever you are working around with the system, you can actually view this if it is a custom start date or not. You can actually make it since inception if you want, and that will display all the funds since inception. Now there is another column which is called as relative column. Now we have given an option to actually onboard it and offboard it, because it will save you a lot of computing power if you're deleting the funds. So let's say I'm taking a call to remove Sundaram midcap. So it gets easily removed, right? So once you have relative column, you can easily calculate it, and that is how the relative columns works out. Now in this relative column as well, as you know, it we have added mid cap funds. We can actually select a relative benchmark to actually benchmark it properly to see the proper alpha, beta, and tracking error and correlation. So let's say we consider Nifty mid cap 100 as a benchmark, which can be comparable, and you can see there is one fund which has a negative alpha from this particular start date. So for relative column, there is another set of start date which takes into account the minimum common period. A minimum common period being the minimum age, youngest fund's age to be considered in the start dates. It will not go beyond that because the comparison in the relative stats won't be possible. That's why you can actually compare it in a singular date format. That, for an example, if you want to know which particular fund is having the highest tracking error, means it is having the highest difference in the standard deviation of their daily returns against the benchmark. So you can actually see Motilal Oswal is actually the most different mid cap fund against the benchmark. And in the info ratio as well, if you want to know which fund is actually having the highest information ratio, which will show you the alpha, the more the information ratio, the better it is based on the alpha generation. So you can see if there is a negative alpha, you will see a information being negative as well. Even if the fund is being different against the benchmark, it might be different in a negative way. So that is how you can compare it, compare any particular category in one place, and you can also look towards correlation. And definitely correlation also shows that this particular fund is actually having a lower correlation against against any other funds, against the benchmark in the relative sense. Then we also have the holdings column. Now, holdings column is also very, very useful if you want to see which mid cap funds are purest mid cap funds as of this particular, last month. So you can see as of the holding, L&T mid cap is having the highest mid cap percentage. And what about the lowest? You can actually view that as well. So currently, in this sense, it is pretty visible itself. You can take a look towards the capitalization exposure, and if you have added maybe hybrid or debt funds into this list, then you can also see the net YTM, average maturity, these certain debt parameters at itself in the system. So this is how the comparative column works out. You can export this system in Excel to do your own customized analysis, and you can also do certain more analysis in the compare section. So we will drill down all those analysis to come up with certain recommendations and suggestions that which particular categorical funds are actually suitable for the client's portfolio. So let's go ahead with the rolling returns. So for rolling returns, what we do is we calculate rolling returns daily. You can have a methodology as per, what you can do is you can keep it absolute or annualized as per your need, and you can keep a statistic as per point to point and simple returns. So we will get back to the simple returns and point to point parameter, but in the sense, when we take into account statistic as simple returns, any data point you choose, even for L&T midcap as of now, any data point, right, in this particular date, 20 July 2017, it just signifies that that is the sum of the previous 260 days daily returns. It means if you start your investment, a simulation of your investment from a start date till an end date of 25th August 2022, what you can see is that every single simulation from the start date, so it is a simulation of 1 year from this particular start date till end date. So every day signifies in this as a simulation of a 1 year rolling return. So what you can do is, let's say you consider a a period of 520, right? And when you run this, now every single data point here gives you a simulation of 1 year or 2 years rolling return, which is 520. So which it is considered as two working period in a year, and that is how you can take a look towards this. And every single data point, just a moment. Yeah. So I mean, once you make an average of entire data point for a 520 day rolling return period, you can get an average here itself. So these all data points, if you make an average here, you can see that one of the fund, which is Aditya Birla Mid Cap Fund, is having the lowest average, whereas other one, Kotak Emerging, is having the highest average, right? And I just got one of the in the chat, what are relative metrics. So let me go back to the main list and show you what are relative metrics. Relative metrics are basically annual return over benchmark, excess return over benchmark. These are all against the benchmark. So whenever you choose relative columns here, you can actually change the benchmark for any particular category. So let's say in a hypothetical sense, we have a large cap as a category added into the system in this particular list. Then you can keep it as Nifty 50 or a BSE Sensex as a relative benchmark to see which one has actually given better alpha against the benchmark. So in this comparative sense, you can see the mid cap categories, and I've chosen as a mid cap 100. You can even choose it as Nifty mid cap 150 if you please accordingly. And you can actually see that for Nifty Midcap 150, these are the only funds from this particular start date which has given an alpha, which is an annual excess return over the benchmark. Whereas these are the funds which are giving, backtesting a negative alpha altogether. And hence your info ratio gets, info ratio also gets into a negative domain due to the alpha, right? There's another set of question, which is what is the difference between YTM and net YTM? It actually takes into account the TER percentage of any debt funds and reduces it with the YTM. What you can do is you can go into the fund categories and you can check here for the debt categories here itself. So let me just load in here, and you can actually see that the net YTM, which is given here for the debt columns, it considers the TR percentage and negates it from the YTM. So you can see, if the TR is this, 6.83 minus 0.60 gives you the net YTM. That is what the net YTM is all about. So let's go head back to the compare section in rolling analysis, where we were heading, where what you can do here is, in the rolling analysis, you can come up with proper set of top 5 or top 10 funds which fits your criteria based on one single simulation. So let's say I'm considering it 260 days, 1 year period. And what I can do is, once I've done this, I can take into a call that for every single simulation I've done for a 1 year period, every single day, which fund has backtested highly in a positive domain. So you can click on this positive percentage, and you can easily see that Axis Medcare Fund is having the highest positive percentage. It just means that it has backtested more into positive percentage, as an 85% in a frequency between 0% to the positive domain. And here you can see the average, the volatility of these all data points from the start till the end. This is the start date, how high it has been and how low it has been. So there is one period in this particular 2014 till 2021, 2022, one year period, where this DSP mid cap fund has backtested high as 64.64%. So let's say you want to recognize which fund has highly backtested into the most high returns in this particular period. All you have to do is click on this eye, and then you can see that this is the fund which has given the highest absolute return for a 260-day period. And you can change this rolling window to get more insightful data. And even for a risk management, you can actually take a look towards which is the fund in a 1 year period. The date can be anything in this particular period, which has backtested the lowest returns. in the absolute sense. So you can just click on the low and you can see ICICI Pru Mid Cap. Gives you a very insightful scenario as to what kind of funds can be chosen for a mid cap category whenever you're taking a look towards this. And then you can also change the statistic. There are a couple of more statistics like volatility and rolling wall, where you can, whereas a return upon wall can show you that based upon return and wall, the ratio of the return and wall, which fund has actually backtested a better average. So there is a possibility that sometimes for a 260-day period, a return upon wall might be too high as a ratio, and it might be too low as a ratio. You can see it is as high as 5.51 and as low as negative 1.79. So which fund has actually given a better return upon wall? It is Kotak Emerging Equity. So if you're taking such risk, you would definitely want to have a better ratio so that you're getting that particular set of return based on the risk. And if you're taking a very huge risk and you're getting a very low ratio, then that's definitely not a viable option if you're choosing a fund based on the rolling return upon wall. So this will anyway be covered in a rolling return analytics of our session anyway in the next upcoming webinars. So it's a brief overview as to how you can use comparative rolling analytics to come up with certain decision as to which particular fund are suitable for the client portfolio. And one important thing is that if you look towards the range, a range can be a good indicator with positive percentage to understand that these particular fund is actually having a distance. Basically, range is the difference between the absolute difference between this high and the low. The more the range is, the more volatile the fund is, and altogether the better the XIRR can be if the range is high. And it depends, it's a very subjective question, because for an SIP, dates can change and an XIRR can change, but it gives you a proper idea. Because if you take a look towards monthly SIP of a PGM mid cap opportunity, you can definitely see that there is a high XIRR backtesting for that particular set of fund. So you can see that PGM has backtested, SBI and Motilal has backtested. You can actually in rolling analysis you can come up with certain strategies of lump sum and SIP as well. The lower the wall, the better it is for lump sum as well. You can also take it a call due to positive percentage. So that's how you can use rolling analysis in this sense, so that you can come up with one single decision. And there are other parameters which will help you in backing your decisions. Another is calendar years, which shows you in a calendar year sense that let's say you're taking a call on 2018, only one fund has backtested positive, and let's say you're considering a benchmark as well, so you can add in the benchmark here itself to actually compare it properly into the calendar years. So let's say I'm adding in Nifty mid cap 100, right? Once you have added that, you can easily check the years column. So in the years column, you can actually see that for 2021, the highest backtested, calendar years return were PGM India mid cap opportunities. And accordingly, you can, sort in based on all the calendar year parameters, right? And you can actually download this table in Excel. So this is how the years works out, calendar years essentially. And then you can look towards the monthly SIP. So as we have already talked about this, you can choose the installment as in 10,000 rupees. You can have your own start date. You can simulate the start date from any particular period and run the SIPs. And that is how you can check the XIRRs for those particular funds. If you want to make a detailed SIP analysis, you can click on this run detailed SIP analysis, which will onboard you into the tool section. This is the button anyway to see the detailed for singular funds, which onboards this particular tool. And you can also do a risk versus return analysis. So for a risk versus return chart, what we can do is there is a certain button which will help you to zoom in. And now why it is important? Because as you can see, this is an annualized risk and annualized return and annualized risk. Let's say I just want to consider this, only this domain. What I can do is I can just zoom in this domain to see if in this domain, which particular funds or securities are highly aggressive and highly conservative. It's pretty useful if I want to zoom in that particular universe. So in this universe itself, if I zoom in, I can see that only this fund is more aggressive, whereas this fund is lesser aggressive altogether. So it is a very relative term based on risk versus return. That's why it is useful to have a dynamic tool which will help you to take a look towards the point to point risk and return. So you can change this point to point basis, because once you change it for 2018, you can actually check it for that particular date. That is how this works for the risk versus return tab. Now let's head back to the positional overlap and correlation. Now this is very useful in a portfolio review, when you are making a portfolio review. So let's say we
Yeah, why
consider
don't you
that
take
there
the
is
questions now? Because otherwise those questions become irrelevant afterwards. So because the
uh,
people will get question when you are explaining. So if you answer at that time, it is easy.
Can we answer this question at the end of the session, please? Because in the flow of the training, we'll be lost.
Okay, I mean that's
Might
what.
please carry on.
Okay.
sure, sir. So okay, so based on this position overlap, you can add in a, s- a particular portfolio as well. To add in a portfolio, whenever you have any portfolios inside your portfolio section, let's say any portfolio, I'm loading a portfolio in front of you. So let's say this is the portfolio I've loaded, right? And once you run this portfolio and you want to make a positional overlap analysis of this portfolio, you can easily do that into the compare section. To do that, all you have to do is just have to click on this compare button, right? And once you have done this, you can check the positional overlap very easily. Now, this is very, very useful if you want to, check if there is one security or two securities which are overlapping highly, like Franklin India Flexi Cap and Franklin India Blue Chip. If you click on this 44%, you can see the, a particular overlap between those stocks inside those particular, mutual funds. And essentially you can see the overlap of this matrix for every single funds as well. So essentially, if you're trying to take a look for these positions which are overlapping, this is a most useful way. We have also got this minimum common holdings. So this only gets activated when the all the particular funds holds that particular stock. So as a matter of fact, if you add in certain portfolio, you might see that ICICI Bank is actually is available in all single mutual funds. That is where you can see the you know overlapping positions with the minimum common holdings. And then we can take a look towards the correlation as well, as correlation gives you an idea about uh, how the price momentum of any funds have behaved from this particular year till this year, right? It is a point to point basis as well. And you can actually see a high correlation between Franklin India Blue Chip Fund and Franklin India Flexi Cap Fund. Now, a high correlation is actually closer towards one, which is this number, and a low correlation is actually farther away from one, which you can see this is one number which is compared with a pharma fund and a flexi cap fund. So a correlation is very useful for diversification to see for a longer run period how those two funds have actually behaved. And this is very, very useful as well to take a look that what is the difference between positional overlap and correlation. Positional overlap considers the holdings of the funds for the previous holdings which they have updated as an AMC, and a correlation actually takes into account the price momentum of any particular mutual fund against each other. So the higher the correlation, the more their behavior can be similar. If they fall together. They fall if they have a up in an up market, they have an similar up market behavior. There might be a different set of volatility but a similar behavior altogether. Then we have the performance chart. So these are the couple of things you can easily compare. In the performance chart itself, what you can do is you can, let's say you want to compare only two funds, you can just remove those funds in one place, and you can actually compare those two funds into one particular performance chart itself. You can have your own start date and end date from any particular date if you want to have. And after that, you can activate those performance chart altogether. And as I've clearly stated before, you can, if you want to add an index, it is pretty easy to add index from here. Once you have added that, you can actually see the comparative performance against any fund and choose those funds altogether. That is how the performance chart looks like. And then we have the point-to-point measure, which gives you a scenario making ability, whereas you can actually have a start date and an end date, right? So any start date or end date, if you choose, let's say for an example, if I choose a start date of 2021 uh, March, and an end date of let's say 2022 March, right? And if I want to compare this in an annualized sense, I can easily do that. And as you can clearly see, let's say I'm adding in Nifty 50 here, you can easily compare Nifty 50 in a point-to-point domain to see that for an annualized sense, this is the date I've chosen, a 1 year period. The highest return, an annualized sense is actually Aditya Birla SL Medcap compared to Nifty 50, which is standing in the middle in this particular set of scenario. So there are a couple of scenarios you can change through calendar dates. These are the easier ways to compare all 5 scenarios in one place. And you can also download all these funds with the current holdings in one particular Excel. So this is one button which is also very, very usable whenever you're comparing couple of securities here. And then the last 12 months. So for the last 12 months, these are the performances of the 12 monthly performances, which shows you the average monthly performance, best, worst, annual volatility of this monthly performance as well. So this is how the comparative parameters works. Now, a very, very important update here is that what you can do is, if you have a particular sheet, which is actually, which you want to display it to the client, you can export it in Excel, which is an editable report and which can also be used in a portfolio analytics. So how do I mean by this? If you just click on this, we have given a certain cap here. You can only export 20 securities in one place as it requires a computational power. Once it is done, the Excel the portfolio PPT comparison report gets downloaded and you can actually view it. So let me just give you a brief of this comparison report. I hope it is visible to everyone. So this is how the report works out. You can even activate it now in your system and check it out. It's a pretty comprehensive report. I will just share it with you. So here you can see accordingly, this is the comparison report with the 9 securities I've chosen, and you can see all the data sets whichever we have done in the comparison in one particular PowerPoint list. And this particular pages can also be copied in your portfolio PPT report, so which is very, very useful. So these are the table with the majority CAGR, standard deviation, everything is given here with the risk versus return chart. So this is also very useful. You can copy this entire risk chart into the PowerPoint of your portfolio report as well. So this is how the report comparison we have recently released for everyone. You can also view the uh, uh, positional overlap against the holdings of every single fund. So you can say that Franklin Blue Chip and Franklin India Flexi Cap is actually having a very high positional overlap. So these are the comparative reports from point to point, and we have given the comparison report of from 1 year till 15 years. These are the return comparisons, the calendar year comparison. So there are lots of comparative reports we have actually generated. You can check the rolling return stats in front of each other, with the best average is being Nippon India Pharma, and that's how the entire system works. So it's a pretty comprehensive comparative reports you can generate. And once you have done that, I will show you one way to actually add these all reports into your portfolio as well. So as you have all remembered, this is all the securities which were added into the compare section. We can actually create a PowerPoint here itself. So let's say we create a 50 lakhs as a PowerPoint report for our clients, right? And once it is done, you can either choose to add couple of more parameters from the compare report directly into the PowerPoint as well. And it is very, very useful and comprehensive report, which you can, make a customizable approach towards. So just let me just load in the PowerPoint report. So I hope it is visible to everyone. Just a second. Okay. So as you can see, accordingly, I can enable this editing. Yeah. So accordingly, I can, load in this comparative reports, and, let's say I want to take a call on this risk versus return chart. I want to add this into my system. So all I can do is I can just add them as a system, copy and paste it into the system in this next tab itself. So it's pretty, easier to, make a portfolio report within the comparison. And you can add them like a new slide. I can just keep it here, copy this entire system here, and paste it into my next PowerPoint report altogether. So once it is done, you can actually use multiple set of comparative parameters into the into the PowerPoint report of the of this particular portfolio. It's pretty customizable. You can use it for for any even for a comparative report for the portfolios, when you make a proper presentation for the client, if you're making a model portfolio altogether. So it's you can add this into the system and keep it as a report altogether. So this is how the PowerPoint reports works out. There are many more things which we will be adding into the compare section, many other functionalities. And one important thing here is that it is not just constrained towards mutual funds. If you add stocks or even index into the compare button, that can also be onboarded. So let me just show you that demonstration as well. So let's say if I'm in a compare section and if I add in a index here, right? Or let's say even a stock to demonstrate it. So a stock here, yeah. So once you add this and once you make another set of report, that will also consider these all securities in one place. So it's a pretty comprehensive report that you can generate within a single click, which is usable, by just in a matter of seconds. So just a moment, I'll just take this reports out. Yeah. So as you can see, whenever I've loaded this, you can see this, this is added as a fund, as a stock, and even as an index. So you can see the index being added here itself. Plus you can see all the indexing in one place for the risk versus return and everything. So that is how this works out for the comparative reports, which you can make with this particular comparison chart altogether with the compare function. uh, I have already completed our session, so we can start with the Q&A. So we can head towards all the questions which were asked before.
We might take questions one by one and just keep answering them.
Yeah. So the first question by Raj Shekaraya sir is positive percentages of what? Is it the total number of sample points? Yes, sir. So for positive percentage in rolling analysis, what it means is that, in a hypothetical sense, if you start your investment on 2014 till 2022, right, every data point will show you 1 year returns, right? Now you want to know what is the frequency of these all data points to be in positive, right? It is the, back tested frequency. So what it does is that from 0 to 100% or 200%, this is the this is the index or a fund which is actually 83%, 83.38% of the time it is positive. It has back tested positive return for a 1 year period. So that is how this works out for the positive percentage. You can even simulate this. You don't have to do anything on this. To simulate it, all you have to do is just check distribution here. So you keep it as 0. So 0 being the 0%. And let's say you keep it as 1000%. So anyway, no one has already backtested 1000%. So you will know that your data point will be between positive data points will be between 0 to 1000%. And you can definitely see that Nifty 50 and this number is actually backtesting exactly identical. You can see Franklin and this. So this is what the positive percentage is. It shows you the frequency of the data point coming into positive. Yeah, there's another question for rolling return. Why do we take 260 days and not 365 days? Isn't even on a working days basis. 260 will be just a guess and may not be accurate. Can't the software calculate actual working days? Sir, actually 260 days is actually considered as rolling return, 1 year window, because we consider 21 for 1 month. If we consider 365 days, then 1 month can be sometimes 23 and another month can be sometimes 22 or 21. So that is purely inaccurate in a sense. To make a proper accuracy, we have considered 1 year as 260. But you may choose to have a rolling window or 360, 365. If you please, you can just keep it as 365 if you want to do that in a sense. As we are calculating daily, it is an advantage for you to choose any date. So let's say I want to do for a quarter basis, I keep it as 65 and I run this. I can now, in an absolute sense, that if I invest for every 65 days, for every day, that is what my average is. So you can see ICICI Bank Limited as a stock will give me the highest average against all the mutual funds. There's another question by Raj sir is, what is volatility? It is a standard deviation. Then return upon wall will trend with Sharpe ratio. Sir, this is a statistic which is called as return upon wall. It isn't a Sharpe ratio because we do not consider the risk-free rate as a government bond in this particular system. So basically, what we do is we do the let's say for a 260-day period, we consider 1 year return upon the 1 year standard deviation. That's it. Once that is done, then every single data point will give you some set of ratio of 1 year annualized or absolute return upon the standard deviation, which is this average of all these data points. So you will get this particular average. So in a sense, any point you go will just give you a ratio of 1 year, which is 260 days return upon 260 days volatility, which is standard deviation. There's another question. What is used as risk here? Yes, sir. For annualized risk, we consider it as standard deviation. So we have written it already. So if you mean by this, then this is the one which we have given here. There's another question by Miss Archil, which is these are actual returns or rolling. So ma'am, if you're talking about the rolling tab, then these are the rolling returns. You can check rolling returns from here with simple returns or an point-to-point returns. You can run this simulation, which shows you that this is a 1 year period of a rolling on a rolling basis. So it rolls every single day for 1 year. So that is what the rolling returns are. For actual sense of return like a CAGR or something, if you're talking about that, then we have already given CAGR here itself. And that starts with if you want to have a particular start date, you can have a particular start date for every fund, or you can even have since inception of any single security. Okay, there's another question. Can the PPT slides be copied to our corporate PPT format? So this PPT is already in our own format, which we have given here. Uh, it's completely editable. So, you can copy the charts and lots of stuffs in the PPT itself. You can add in your own inputs. We have also given a co-branded way. So already, if you have already had the reports generated, you will have your own logo here itself. So it's completely a proper business pitch book kind of a report, which can be used as a corporate in a corporate level. So that is how you can use. So as you can enable the editing, you can actually customize any point of parameter if you want. Any other questions? There's another question from there's another Vijay Ranjan sir. So can you please write the question, sir?
There's a question, where can the PPT slides be copied to our corporate PPT form?
Sir, that has already been answered, sir.
Okay.
I just want to check, because when you are showing the comparison, no? Can you hear me?
Yes, sir. Yes, sir.
So the thing is, you are changing all the. It is not one particular category. It is mingled with all the categories. Flexi cap is there, mid cap is there. Is it just for the show purpose, or you are giving? If you want to check only the, say for example, I want to check only large and mid cap.
Yes. Definitely. So initially, when I started this session, I've already shown a way.
Late, 10 minutes late. That's why.
Oh, okay, no problem, sir.
I
So
was not
it is
connectivity.
yeah. So actually, this all securities were added for a purpose to show the positional overlap, as we positional
But how can you show?
overlap.
Because say for example, if you're category wise, if you're taking only particular category, large and mid cap or whatever the category, then you can show the overlap. But if you're looking at your thematic also is there, this one also
Definitely.
is
So because when you're considering, so let me clarify this. So when you're considering a portfolio, right?
Okay.
You would definitely want to know that what, even if you're now, you won't be adding all the mid cap funds in a portfolio. You would have different sets of funds, right? A client will hold. So what we do is you can click this to add them to compare.
Now, where it
right?
is coming?
Once
1 minute. Sir.
Yeah.
In your skin, the top is you're showing that portfolio.
Yeah. Yes, sir.
Your comparison, the client make.
Yeah. Yes, yes. So when you're in the let me clarify this. So when you're in the portfolio section, right?
Okay.
Now, if you want to know the positional overlap of this funds which the client holds, it's a prospective client you have. Right? So how would you, right? So what you can do is you can easily click on this button. You don't have to copy this and add it to compare one by one. You can easily click on this button and it will show all the funds in one single tap.
Whatever the client is having.
Yeah, whatever
now
is
you
whatever
can
the client is having, then you can just tell him that these are the overlap happening in what are the funds that you are holding. Suppose you are holding 10 schemes, and you see that the overlap is happening in this many number of overlap is already there.
I got it now. Okay.
And about your another question you had, that can we not compare only one category? Sir, definitely you can compare. To compare one single category,
percentage will be high. In that case, the percentage of overlap will be high because the category is the same.
So you can see all the mid caps being added into the system, and you can actually see the positional overlap of it or any particular comparative parameters in one place.
Okay. Correct.
There is another question. Trailing returns can't be compared here. So, ma'am, in this comparative tabs, we have not added a system to actually compare the trailing returns. But we will take it as your feedback and we will update you on the manner. Are there any other questions?
Yeah, one question I have is in calculating the Sharpe ratio, no? This is outside of what you explained.
Right.
I want to know the returns is taken annual one or monthly one or a daily one?
No, sir. So the Sharpe ratio, what we do is we take into account since the inception. So whatever you take as a return, it is taken since inception minus the risk-free rate upon the standard deviation. So whenever you calculate it, you can see this, government bond 10-year, which is used as a, risk-free rate in our system to calculate the Sharpe ratio. So, I mean, there is one important thing here is that I've already stated this, that you can see the Sharpe ratio here being, as this particular number, right? Now, it is as since inception of these funds, these age. Now, if you want a Sharpe ratio, which is from the start of one particular date, which will be the most accurate comparison, then you can actually, keep one particular start date, let's say 2016, and you click go, and you will see the change in the ratio altogether. So you can see the change altogether here itself. So that's how this works out for the Sharpe's ratio.
Okay. Yeah, because we are comparing, so it should be at some common date that we can set there. Okay. Okay, got it.
There's another question: where can we see SIP projection if a client wants to start a SIP from today's date till 2025? Sir, let me clarify this. We do not do projection or a forecasting. We only backtest what has already happened. So for an SIP as well, we just show you the XIRR based on particular date you have chosen, and you can run the SIP for any particular fund or an index or a stock. So you can see the XRR based on what has actually happened if you would have, done that hypothetical, investment in 2014 for every single month based on this number of installment.
I had tried this once. I don't know whether I had made a mistake. So if I change a different date rather
Right.
than since inception and then run the whole calculations, and after that when I'm downloading it, it still took the original date as in the since inception date. Was there an error in what I was doing, or?
Sure. So we will check that out, sir. We will test with our team with the custom date and since inception date.
Umar, why
And
don't you have a one-on-one discussion with him and just clarify
sure.
if there is any error on our part or whether there is some calculations error? Do a
No,
one-to-one
at
session
least
and just clarify,
you
please.
you can tell me how it works. I mean, the specific data points is supposed to be downloaded, right? If I choose a specific date.
Yes. Yeah, so we will check this if it is an error or not from our system. So we can have one training session with you. We will give you a call, and then we can solve this query altogether.
Sure, thanks.
Okay.
There was another question. What does overlapping of stocks indicate? Higher it is, we can't go for fund, is it? Yes, ma'am, it is an overlap between the two funds. Basically, if you see the Tata mid cap versus Sundaram mid cap, uh, the stocks overlapping is 40% between them. So this is the overlap between them as a stocks or a security. Now it depends on which particular fund would you like to go for, is either Tata mid cap or either Sundaram mid cap. It is all your call based on the particular parameter, maybe rolling or maybe risk versus return can be more helpful for you to take a call on this. So that is how this works out for the overlapping. Okay. So there's another question, which is what is calculate? Calculate, sir, if you mean this one in the main list, calculate. So this is basically to assist you in, if you do not want to run the calculations of relative columns, because it saves a lot of time in, removing the comparison, comparisons of the funds. Then you can just easily do so. And if you want to onload a calculation of the relative column against an index, you can easily click on this button, and that is how it calculates all the relative columns here. So now you can see the calculations being done. So this will help you in making the process more smoother, and it will also give you a proper set of calculations in the relative column. Okay. In funds, show top 50. Can it be keep flexible less than 50 or any number? Sir, we have just given a standardized screener. If you mean by this show top 50 and top 100, it anyways, we have given 50, 100, 200 and 300. But this apply filters will, effectively assist you to make it lesser than 50. So I have not seen any category, let's say, even if I consider a large cap fund, right, entire equities itself, and I keep certain parameters like negative 28, you can easily see that it gets lesser than 50 altogether. So you can use this as a filtration to make the list of the funds more lesser into the screener.
Main
Are there any
selection.
other question? Hello?
Um,
Hello.
Yes, ma'am.
I have already asked in chat box. I was asking, like you have your minimum AUM ka apply filters ka this thing. You don't have for maximum AUM, so that we can use that as a filter as well,
Yeah, that is
as a parameter.
true, ma'am. We can, yes, but as you know, it's pretty easy if you have a minimum filter parameter and apply it. You can easily sort in based on the maximum AUM just by clicking on this AUM in crores button. So you can actually see these are the funds uh, which uh,
So my
which fits
question
the
here
criteria.
remains the same. Like if I put here, like earlier you have entered around 1500. That is the minimum AUM. So you were
Right.
getting the this thing AUM which are minimum of 1500, and rest all below that, right? Am I right? Am I correct?
No, no, rest all above it.
Above it, right? Rest all
Above it,
above it.
yes.
Like it was in ascending order, right? Above 1500.
Yes.
Yeah.
Yes, you will not
So
see funds below 1500 if I add in
yeah.
1500.
Yeah. So when you apply here, so the fund where it is, yeah. So here it starts from there. So if I want to check along with this the maximum side, like say for example 1500 here, and I want to check 12,500. So in that range can kind of thing I was asking.
Okay, got it, got it. So
Got it?
yes, for a filter, we will check that with our product team. We have added that into our list. We will update you on that, and we can also write it on the support as well. If that can be added or not, you can write us on support with your query and the feedback, and we will definitely give you a proper reply on that.
Okay. So that will be useful now. So
Okay, ma'am. Okay, thank you, ma'am.
okay.
So any other questions? Thank you, sir. So we will also contact with you as you have already raised one query. So we will check it out and we will definitely be in touch with you. If there are no questions, then we can wrap this session up for today. You can write us on support. I'm writing this mail to everyone so that you can easily get in touch with our product team who can assist you for even for individual trainings and even for your feedback and queries. So this is the mail which I'm writing it down in the chat box, which you can note down, everyone. And hopefully we can come up with a new topic or a new update in the next Friday 4 o'clock same time tentatively. Thank you so much everyone for attending this session and have a nice weekend.